Hi everyone, welcome back to Sunday session of Berich podcast. In this session, we are going to discuss about the recently concluded Indian elections and its impact in the stock market. So, for the past 10 years, the ruling party had the majority of the seats and the stable government was there. But now, the ruling party did not have the majority of the seats which were needed to form the government. So, for the next 5 years, it is going to be a coalition government. So, what difference does it make if the government is a coalition government?
Well, the problem is, aside from the news of the government forming and all that, when people make investments, they make investments on hoping that certain things happen.
Okay.
And now it's very apparent, yes, we have a government and it will be the continuation of the current government. Things you plan to happen did not happen, right? And that has led to a lot of uncertainty in the market.
Okay.
So as an investor, especially for a foreign investor, and you're not cued into India, and you don't know about Indian companies and what's happening, and you're working through different investment advisors and you're investing, when you see this kind of volatility, it gives you fear. So a tendency when you see fear like this is to pull your money out, which is what's happening. Foreign investors have been withdrawing money since the beginning of the year in India. What is the problem now is no one party has got majority. So whomsoever forms the government, whoever becomes our prime minister, his cabinet is going to be a coalition cabinet. And you have seen this throughout the world, especially all over Europe, how strong a coalition government is. A strong coalition government is as strong as the weakest link. An Indian cabinet is going to have many weak links. For example, if now before this election, if prime minister wanted to do something, he could unilaterally move the rest of his allies in the cabinet and just do what he wanted to do because they were majority and nobody could say anything. Now he cannot move like that. The minute he decides to move like that and not refer to his cabinet on every single thing, he has to go back to the cabinet now. And if anyone in the cabinet decides, no, this is no, can't do anything, then he cannot move because that person, whoever is in the cabinet, will say, I have to go back to my boss. His boss in the state may have different views. So this has become the problem. So as an investor, you don't know. That's why you've seen certain companies which were in favor of the government, which you looked at these companies favorably, have real beating in the market. And companies which were considered to be favorable to the opposition are suddenly also going up in the market. So as an investor, I would say be cautious. This volatility is going to be there for some time. Until I would say for at least 6 months to more, because government has to form, cabinet ministers have to be sworn in, allocation of cabinet and ministries have to be done, and then we have to see how far and smoothly this coalition runs. And the promises the prime minister makes, whomever the prime minister becomes, makes to the cabinet, and the cabinet feels he is correct. So this is internally within India. Outside India, America is going through a similar process in their own election. There's a lot of confusion in the US. The former president has been convicted and he's now a convicted felon, right? And with sentencing is going to happen. They're saying in US there's no rule against the president even serving from jail. So it's very strange times we're living in. So as an investor, you should be cautious and you should make your investments knowing that whatever happens in the world, 10-15 years from now, you will want to retire because physically you will be old. Regardless of what happens, you are physically aged and you need to retire and stop working. So you have to keep that as your priority and keep that in your mind like a horse, be like this and keep that focused and not get swayed by election results, by what's happening geopolitically. See the companies you invest in. What is the growth prospect for the next 10 years, 15 years? And based on that, invest. And when you see an opportunity to invest, like when you see the correction, I had mentioned on Instagram, though I was on a holiday, that it was an opportunity to invest. There are a lot of people who chat with you and me who've been sitting and waiting for an opportunity. A great opportunity came. I hope a lot of you captured that opportunity and invested at that time. It doesn't have to be much, whatever little, even with just one share. You will feel happy that you bought that one share at that discounted price because then you'll see it growing year on year and you'll feel happy. There are people who I know just have one share of IndusInd Bank who they bought it at a very low price of 300, 400 during the COVID collapse. They're holding on to that one share and they feel very rather nice that they made some investment, seeing some prospect of growth. It's always hard to start. So my advice is start. Don't focus too much on the news. Focus more on the business you believe in, you understand, and you are an investor in that business because you understand that business. That's why I don't talk too much about AI and AI stocks, because it is so new and there's so much unknown in it. It's very difficult as an investor to wade through that and invest. Even Nvidia. Why is Nvidia doing so well? The simple reason is they've got a monopoly in the market right now. They're manufacturing a chip which is required by a lot of companies, and they can charge whatever price Nvidia feels.
And recently it crossed the 3 trillion market.
Yeah, that's because the sales are pushing that. If you look at it, they're manufacturing a product. There's no other one manufacturing it. It's got a beautiful moat. They can charge whatever price he wants, and people need it. So he's in a very Goldilocks zone. So that company is going to do well. And analysts are forecasting growth for that company in the near term, short term.
And even it is predicted to beat Microsoft market cap also.
See, I can't predict that
the
far.
Analysts are predicting.
Yes, analysts are predicting. That's because they feel that nobody else is there going to be manufacturing. That's not true. AMD has started to manufacture. They're building plants and they're building ideas. Intel is doing the same thing. They're building. And lots of people are seeing opportunities in making AI chips looking at NVIDIA. So you don't know where a new NVIDIA will crop up and steal the thunder from it. And it can happen. And it's happened in the past. Nokia phone, I don't need to mention. I don't need to mention BlackBerry phone, Palm, I can mention. There's a whole plethora of camera companies which were there. Who are all been decimated when film went away and became digital. Now digital is going away also. Because the idea of a photography and videography is changing so dramatically. Holding a camera and shooting, you do hardly see anybody. Most people are holding their phone. Even that is slowly disappearing. So it is a question of seeing how the market goes and investing according to that. I cannot say with guarantee that NVIDIA will be a fabulous company to own 10 years from now.
Which sector do you see benefiting more from the change of the government?
Well, I did that in Be Rich. I had spoken about that. And I feel if you're an investor, I would be defensive right now. Defensive are companies which are selling or doing services, no matter what the weather is, human beings will need it. And the most defensive stocks to buy are FMGC companies, because we need atta, we need toothpaste, we need soap.
In daily basis.
No matter if it is summertime, if it is winter, if there are floods, there are no floods. If there is war, there is no war. Wherever you are, you need to eat and you need to wash yourself. So I would say those companies, yes, they may not offer, like I said in the video, great growth. They're not, I cannot buy an FMGC sector and company right now and think it's going to grow at 10% over 1 year or 15% over 1 year. Maybe an IT or an AI company, someone can tell you that, sure. But over a period of 10 years, it'll be there. The company will be there, it'll be stable, and it'll keep ticking along. Please stay away from small cap, and medium cap is my strongest advice. Most small cap and medium cap is where the most of the volatility is. If you've seen over the last 4-5 days, if you study it and see. And I would strongly advise everybody to stay away from small and medium cap and stay to large caps.
So I hope that this video was informative. And if you like this video, please share it with your friends and subscribe to this channel for more videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.